Hello, and welcome back to Elements in Focus. So glad to have you here. Today we're talking about avoiding common tax pitfalls. And let me tell you, I'm so happy to have no other than our illustrious Rheaume with us for this discussion. Aaron has been leading our team as Director of Financial Planning, especially in what we love, our niche, which is tax planning. And no better individual to have on the show today talking about avoiding those common tax pitfalls. And now, especially with the OBBB, or One Big Beautiful Bill, that's passed, there's a lot of things to really unpack. So Aaron's going to do his best to give us some snippets, but please pay attention to the articles that come out as well. Aaron has a lot of really good insights and spends a lot of time writing those articles for us too. So Aaron, without further ado, my friend, a lot to unpack here, but I know you're the man to do it. Avoiding common tax pitfalls. What we got?
Yeah, if we could spend the next 60 to 90 minutes, Grant, covering this, we can get into really some good detail.
Right.
I'll just give you all 3 to 4 points that we see as financial planners here at FEG that may, as the title said, be just common knowledge to some folks. But here's a few items that we generally see in the office that we want to help avoid when those pitfalls arise. So first thing is really not understanding how capital gains tax works. And we see sometimes where we'll see short-term capital gains that are issued on someone's 1040 versus long-term capital gains. So short-term capital gains is selling a investment that's held for less than a year, and that's taxed at ordinary income. So it falls on whichever marginal bracket you would land on. Whereas a capital gain, holding an investment for 1 year or longer, is taxed favorably at capital gains rates, which could be 0, 15, or 20%, depending on your marginal bracket. We talked about this in some of our investment videos, is when you rebalance your portfolio, just neglecting what we call tax loss harvesting. And that's using positions that may have not performed very well in a portfolio that could be at a loss to offset some of your capital gains that you may have added to your tax return that I just talked about. Another one that's commonly not talked about but should be paid attention to is we talk a lot about marginal brackets from a federal standpoint. So we start off with a 10% bracket, work our way all the way up to 37 at the top of the tax bracket today, but don't pay attention mostly to what is state taxes due to when you withdraw money. Here at FEG, we're paying attention to both your federal and state, but most of those conversations revolve around what is my federal tax bracket, and not paying attention to making sure state taxes are included as well. Lastly, and we'll wrap up real quick, is just ignoring tax advantaged accounts, making sure you're participating in your employer 401k, especially if you get a match. Do you have your income below a limit to where you can contribute to a tax deductible IRA and get a tax deduction? Are we doing proper tax planning if your tax bracket allows it, and moving money from an IRA to a Roth IRA in the form of a conversion? And then lastly, making sure you're funding things like HSAs and 529 plans that can provide some tax benefits, especially here in the state of Indiana. The 529 plan allows you to get a tax credit. We love the HSAs because they're really a triple tax savings tax benefit. Dollars going into those HSAs are not taxed from an income purpose. They grow tax-free, and as long as they're used for medical expenses, they can be dispersed tax-free as well. So a lot to unpack there. 3 to 4 bullet points on things that are often missed, where it may be common to most people, but as advisors, we see this all of the time inside of the offices. And so if you have questions, I'll turn it over to Grant.
Absolutely. And well done, Aaron. I mean, it's conversations like this, brother, that make me want to light a campfire, get some nice cup of coffee, and you and I spend like 4 to 5 hours with people just being able to listen to what we see. But really what Aaron's getting at too, folks, is that your situation is not common.
Yeah.
And there's a lot of things tax-wise going on that your tax professionals, like your CPA, are trying to report with the best information they can. But really, tax planning is critical. So if you're looking at your situation, and some of the conversation that Aaron brought up today sparks, hey, I need to have a discussion with a team that understands how taxes function, please give us a call, 800-928-4001. Would love to schedule a complimentary meeting to sit down, review your situation, and see if those pitfalls are starting to arrive. You can also ask us questions at talktofeg@lifeafterwork.com. We love answering those as they come in. And again, Aaron has composed a ton of content on taxes over the last decade, and you can find a lot of his articles on yourlifeafterwork.com. We'd love for you to check out the website, look at some of those other articles and some of the other recordings we have done over time as tax laws have changed, etc. We'd love to have you for that meeting. So please, 800-928-4001. I'd love to have a conversation with you. Thanks again for your time, and God bless.